we are coming to a very important lesson, and this is also a practical lesson. So when you do practical work, when you work in a company, basically this lesson will be much important. I mean, not an audit firm, but maybe if you are going for a mercantile sector, this topic, this lesson is very important. So this is budgeting, right? This is budgeting. Now, you know what is meant by a budget. I know that. Why? This budget, you heard this word. Budget means you are preparing a plan, right? Specifically for a future period, you are preparing a plan. Budget. Okay? Maybe government will prepare a plan on what they're going to do in future, maybe next 12 months, how they are going to spend, how they are going to receive money. So likewise, they will be having an overall plan, budget, that we call as a budget. And in a company also, management is responsible to prepare a budget, right? Sometimes it will be you. Maybe when you got promoted, it will be the person, you will be the person who is overlooking the budget function, right? Maybe like after 1 month, some companies are preparing budgets, monthly budget, yearly budget, quarterly budgets. And you need to have the understanding, okay, how to prepare that. So budget, simply you can define, right? You can simply define the budget. So as per my tude, right? So it's like a future plan, right? Descriptive plan of a future financial period on what you are going to do and what you are going to receive. Basically, now how to start preparing a budget? Right? When you should start, where you should start a budget? Let me make sure. Always you need to start a budget from the principal budget factor. I will explain. Principal budget factor. You have to start with the principal budget factor. What is principal budget factor? Lamai, principal budget factor is the significant important factor of your company which all other factors are being decided. What is that? All others are decided based on this factor. Normally, what is that? You know. That is what? That is basically the sales. Why? Because most of the time, how much you are going to produce will be decided based on what? Sales. Decide how much you are going to produce. So if you know how much you are going to sell, definitely how much you are going to produce will be based on those sales. And how much material you need to buy will be based on that. How much of employees you need to utilize will be based on that. So everything will be based on what? The principal budgeting factor. So it could be what? It could be sales. It could be sales. And any other? Where sales are independent. Sometimes it is demand. If the demand is there, you will have to go with the demand. Why? Because sales also dependent on the demand. Demand means the market, the industry demand. But the sales means how much you are going to supply, how much you are going to sell from the total demand. So demand also may be one factor, right? Demand also one. And any other thing? Make sure this. If you are having limited resources, which are less than your expected sales or the expected demand, in that case, can you make a budget for the sales? No. If you are having limiting factors in your company, your principal budgeting factor should be the limiting factors, right? So in that case, you can write that class, limiting factors, right? It could be changed. Could be changed with the scenario, but mostly it is sales. Now let's say you don't have any sales in your company. Your company is there to help another parent company. You are in a group of company, and your company is there for others to help. So what you will be doing, whatever they are asking. So in that case, maybe not the budget, not the sales, but what is the requirement from the parent? So you need to understand. At the examination, probably it could be sales. But if there is a alternative scenario, you need to understand, because I'm giving you the logic, right? Not katapada. Okay. Now, so after you identify the principal budgeting factors, probability sales, we'll go with that assumption. So which means, what is the budget that you need to prepare first? Lamai, that budget is the sales budget. First budget that you need to prepare is the sales budget. Then, sales budget, I will put example. Let's say, we are going to sell 10,000 of units. So this is the starting point, Lamai. You are going to prepare a budget. But first of all, you need to start with the sales budget. Right? First, you have to decide how much you are going to sell. And based on these, all other will be dependent. What is the next one? Once you done with sales budget, now you know how much you need to sell. 10,000 units. Then to sell, what you need to do? Think and tell. To sell, what you need to do? Think. You need to sell. So you should have those units. So how to have those units? You need to produce. So unless you are getting from somewhere, right? So this is basically from manufacturing point of view, right? So if you want to sell 10,000 units, you need to manufacture that. You need to produce. You need to do the production, which means after sales budget, you need to have a budget called what? Production budget. Now, understand this. This logic is very important. Understand. You need to sell 10,000 units, which means how much you need to produce. You may tell, yes sir, so 10,000 sell now. So you need to produce 10,000. But do you really produce the same number of quantities that you will be selling? What about the number of inventories that you are going to have at the end of the month? You are going to have a closing stock also with you. What I'm telling you, at the end of the month, you are going to have a closing inventory. Now, this is not for the sales. This means, now let's say, now we are in the 31st or 31st January. Now, February 1st, to sell some inventories in February 1st, what you need to do? You need to produce in this month now. Why? Because in February 1st, you cannot produce and sell. You may need some 2 to 3 days to manufacture. So what you are going to have? You should have inventories for the first few days. which means you are not only producing the quantities that you will be selling, but also, right? So these are sales. These are sales. Not only sales you are producing, but also closing inventory you need to produce, right? I hope this is clear. I hope this is clear. Now let's say you should have 1,000 of closing inventory. 1,000 of closing inventory, which means this also should be produced. Closing stock. Closing stock. See, you need to sell 10,000. So 10,000 you need to produce. And also you should have 1,000 of closing inventories in your hand. Which means not only 10,000, but also the closing stock you need to produce, right? Now, is this over? One student can have this question. Then sir, what about opening stock? This is closing stock. Closing stock next month, opening stock. So which means the next month requirement. Closing stock, how much you are going to keep as the closing stock you need to produce. Sales you need to produce. But what if there was an opening stock? Lamai, if you have opening stock, do you need to produce that now? No. Why? Because it is already there. So which means the number of units that you need to produce will decrease from the opening stock balance. So let's say you are having 500 of opening stock. Now basically you need to produce 11,000. But since you are having 500 in your hand, now you don't need to produce exact 11,000. You may minus how much? Minus 500. So let's say 500 opening stock. You minus the 500 opening stock, and this is the total that you need to produce. So which means you need to produce 10,500. This is the production budget. Make sure you need to sell 10,000 units, and to sell 10,000 units, you need to produce 10,500 units. Why? Because you need to produce the sales quantity and as well as closing inventory. But since you are having 500 of opening inventory, you don't need to produce that. Which means you need to produce 10,500 of inventory. Make sure. All clear, right? Sales budget done, production budget done. I will be doing questions, but before that you need to understand the logic. Okay. Next one. What is the next one? Lamai, you know to sell, you need to produce. But to produce, what you need? To produce, to do the production, what you need? To do the production, you need material. You need resources. So what you are going to do? You need to have a separate budget for that. What is that? What is that? Material. What is? Material usage budget, Lamai. Material usage budget. Sales budget done. So after that you are having production budget. And after that, you should have a budget, material usage, which means to produce, now you need to produce 10,500. To produce 10,500, how many number of units you need? For this, we call another name. We call another name, that is material requirement. Requirement budget. Material usage, which means the requirement budget for this. Now 10,500 units you need to produce. So which means how much material you need to produce this much. That is what simply says. What is the requirement? How much of the material usage will be utilized for the manufacture of this much? So 10,500 units to produce 10,500 units. So let's say per one unit, you need to have 2 kilograms of material, which means you should have 21,000 kilos of material to produce 10,500 to sell 10,000 units. Clear? You need to sell 10,000 units, which means you need to produce at least 10,500 units. To produce 10,500 units, you need at least 21,000 kilograms. Right? Then the next one. What is the next one? Now, sales budget done, production done. You know how much material you need. But to utilize material, you need to do what? You need to purchase material, right? To utilize, first you need to purchase. So the next one is what? Material purchase budget. Material purchase budget. Material purchase budget mean what? Material purchase budget mean what? You need to utilize this much of units, which means how many number of kilograms, how much of quantity you need to buy now. That is what it says. Now here, you see, you need 21,000 kilograms. Lamai, this is also like this. Material requirement. This is material requirement. But the required material is not enough for you to purchase. Why? Because like the production, you should have a material closing stock, material opening stock. So you need to do what? You need to look at how much of a closing material inventory you need to keep at your store, keep at your company. So let's say imagine you need to maintain 3,000 of kilogram. You need to maintain 3,000 kilogram material closing. So this is material opening. Why? Same logic. You need to utilize 21,000 kilogram of material, but you are going to have 3,000 as your closing stock. But initially you had 1,000 of opening material. So which means now you don't need to purchase. Now purchasing 21,000 kilogram is not enough. You need to purchase now 21,000 plus 3,000, 24,000. But 1,000 since you are having at the stock, you need to purchase how much? 23,000 kilogram. 23,000 kilogram. Right? Done. And the next one, fifth one. So maybe this is you can prepare after this or after this. Right? Anyway, you can produce after this or after this you can produce. What is that? Now material done. To manufacture these number of units, you know how much of material you need. But material is the only thing you need to produce a product. Have a unit? No. What is the other? What are the others? Direct material you have extra? Direct labor you have. Direct labor. So the next one is the labor budget. Next one is the labor budget. Right? Next one is the labor budget. That is the labor budget. So how to produce the labor budget? For labor budget, same like that. Same like the material usage. You need to produce 10,500 units, and per per one, you need, let's say, 1 hour. 1 hour of labor, which means you need to have at least 10,500 of hours. Right? 10,500 of hours. Okay, done. And then there are some other budgets also, I would say overhead budget. Overhead. And there are different overhead. These are very straightforward budgets, right? So basically what is difficult is to get these are difficult. Right? So overhead means overhead, you will be getting, okay, so this much of units into, let's say, 10 per one. So likewise the cost, it's like that. So now see, we started with what? We started with sales. Then we decided, okay, how much you need to produce. Then we decided, okay, how much of material you need to utilize. Then we decided how much you need to purchase, and also how much of labor hours you need to utilize. Maybe the cost also as well. And overhead budget, right? Overhead budget. Got it? And the next one. So after that, now you are done with preparing these. So what you need to do is, now you need to combine everything. Combine all. Combine everything. So once you combine, you could do something. What is that? What is that? You can prepare a budget called budgeted profit or loss. Same like you do in accounting. Accounting you prepare actual profit or loss. No? Here you prepare budgeted financial position. Budgeted financial position. So the financial position, how it would be is as a budget. And here comes the best one and the most tested one at the examination, cash budget. Cash budget. So which means how much of money you are receiving and how much of money you are paying, that is basically with the cash budget. So you are done with all these budgets. After that, with this information, you could prepare the budget profit or loss, budget financial position, and as well as the cash budget, right? So sales budget, I will give you an example, the way that you should prepare sales budget. Sales budget, right? Now, how to make the sales budget? Basically, you will put the product. You will put the product A, product B, and product C. Then we need to look at the sales requirement first. Sales requirement. What is sales requirement is how many number of units that you are going to produce. Sales requirement. And then you should have the selling price. Selling price means at which value, at which price you are going to sell the products. So basically, we will say just examples 10, 20, 50. So this is how you should have a sales budget, right? So then, this into this, you will be getting the sales value or sales revenue. Sales value, so 1000 into 10, 10,000. This is 40,000. This is 45,000, right? 45,000. Yeah. So we will say this is 1,500. I'm just going with what is in the code. So this is 22,500. Right? So done. Then the next budget is what? That is production budget. Sales budget. Next one is the production budget. So same thing. Same products. Product A, product B, and product C. Now what's happening? So based on the number of units you need to sell, you have to start. So you start with the sales requirement. How much of sales you need to sell? 1,000, 2,000, 1,500. For that, what you need to do is you plus the closing stock. You minus the opening stock. Opening finished good stock, this is, right? So let's say closing stocks 100, 200, 150, right? And from that you minus the opening stock. So let's say 150, and we say 100. Now, as like this, like I have explained here, from the sales requirement, from the sales you plus the closing stock, you minus the opening stock, then you will be getting what? That is the production requirement. So this and the total. This is 950 and 2050, then 1550. 950, 2050, 1550. Right? That is that. The next one, 3. That is material usage. Material usage budget. Same thing. For product A, how much you need. So maybe if you have different materials, so you need to go with that. But just a simple example, no? So product material usage will be dependent on what? The number of units you are producing. So you need to get the units here. Production requirement first. So put the production requirement, that is 950, 2050, and 1550. Then the material usage per unit. That is 2 kilogram, 4 kilogram, and 1 kilogram. So which means to produce this you need to have 2 kilograms of material. For this product B, you need to have 4, here 1. And then you get the total material usage. This into this you will be getting 1900 kilos. Right? This into this you will be getting 8200 kilos. This into this you will be getting 1500 kilos. Right? So this is something like that. From sales you are coming to production. From production you are coming to material usage. From the material usage you are going to where? You are going to material purchase budget.